All right, let's get right into it. We're talking about a massive financial earthquake that happened when, frankly, almost nobody was paying attention. This was a moment that could seriously redefine money as we know it for years to come.
So picture this. The date is December 24th, 2025. It's Christmas Eve. I mean, by all the rules of modern finance, the market should be dead quiet. Traders are supposed to be at home with their families. But in that holiday silence, a shockwave just ripped through the entire system.
At 10:23 GMT, the spot price of gold, the oldest measure of value there is, it didn't just inch into a new high. No, it absolutely shattered its previous records. It hit an incredible $4,525.19 an ounce. This wasn't a gradual climb. This was a straight-up explosion.
So, what on earth is going on here? Why this insane surge, and on this day of all days? Well, the answer seems to be a perfect storm. Three huge, historic forces all crashing together at the exact same moment. And we're going to break down every single one of them.
Okay, first up, the trigger. It all kicked off with a geopolitical crisis in the Caribbean that went from a diplomatic argument to a full-on military action way faster than anyone expected.
I mean, just look at how quickly this escalated. On December 10th, the U.S. Navy seizes a tanker. Just 10 days later, they board another one. And by Christmas Eve, boom, Venezuelan oil exports are basically at zero. The market had kind of priced in sanctions, but it had not priced in the actual physical seizure of a country's assets on the open seas. The rules of the game literally just changed overnight.
And as you'd expect, the international reaction was intense. The White House said it was a necessary evil to stop narco-terrorism. But the Kremlin and Beijing didn't mince words. They immediately called it piracy. And just like that, the tension went from regional to global.
But here's the really crucial part. The panic that sent gold flying wasn't just about oil. It was about a much, much deeper fear. The idea that the entire financial system could be used as a weapon. I mean, think about it. If a tanker can be seized, if a country's own reserves can be frozen, then what asset is truly safe? For a lot of big money, the only answer was the one thing that has zero counterparty risk.
Now let's talk about the second major driver, the fuel for this fire, if you will. It was a super controversial policy move from the U.S. Federal Reserve that a lot of analysts are now calling a historic blunder.
What's so wild about this slide is the huge disconnect it shows. You have the Fed's own numbers signaling maybe one rate cut for all of 2026. But the market is betting the farm on two, maybe even more cuts. And whenever you have the Fed and the market in a standoff like this, it creates massive uncertainty.
In this chart just shows how weird the whole situation is. The Fed is talking about cutting interest rates at the same time the economy is running red hot. Q3 GDP growth came in at a blistering 4.3%, which just blew away the estimates. I mean, cutting rates into an economy growing over 4%, that's not normal. It's like pouring gasoline on an already raging inflationary fire.
And the direct result of all this? It completely crushed what we call real yields. Basically, after you factor in inflation, holding government bonds or even just cash meant you were actively losing money. And all of a sudden, gold, which pays you nothing, became the high-yield asset in the room, just by comparison.
So we have the geopolitical trigger and the monetary fuel. Now we need the spark, the ignition. And that came from the market mechanics and the chart patterns that finally just let loose all that pent-up pressure in one single explosive move.
For months, all the technical traders, the chart watchers, they were all glued to this one specific pattern, a huge triple cup and handle. The easiest way to think about it is like this. The price of gold tried to smash through a price ceiling 3 different times, and each time it failed, it just coiled up more and more energy for when it finally did break through.
And it wasn't just that one pattern. I mean, look at this table. Every single major technical indicator was flashing bright green. The RSI was way up in extreme territory, showing just insane buying pressure. The MACD, another big momentum indicator, was showing the trend was actually getting faster, not slower. The short-term trend, the long-term trend, they were all pointing one way, straight up.
But the final signal, the real smoking gun, came just 2 days earlier. The market formed what's called a hammer pattern. That's a chart shape that basically shows the sellers tried their best to push the price down, but the buyers came roaring back and closed the price way up high. It was this clear sign that the market was rejecting lower prices, and many analysts think this was the moment the trading algorithms took over, making a run to $4,500 pretty much inevitable. So, you've got a geopolitical crisis, you've got an inflationary Fed policy, and you've got a perfect technical setup. These three things collided and they triggered this dramatic, historic shift in how investors were behaving.
And this slide right here illustrates the result perfectly. For years, right, we all heard that Bitcoin was digital gold. But on this day, the day of a real crisis, that story completely fell apart. While the Fear and Greed Index for gold was screaming extreme greed, Bitcoin was actually down over 2.5%. Investors were ditching the so-called digital safe haven for the real thing. And look, this wasn't just small-time investors getting spooked. As one analyst put it, this was a great rotation. This was institutional panic. All that speculative money that flooded into crypto was now running for the exits, heading for the perceived safety of physical gold. You just don't get a price move to $4,500 on retail buying alone. This was the big money move.
Okay, so that explains the why. That's the story of how it happened. But what happens now? As the dust starts to settle, the world's biggest banks are all scrambling to revise their predictions for what comes next.
So let's take a look at the new numbers. JP Morgan is now targeting over $5,000 an ounce, pointing to huge demand from China and that capital rotating out of crypto. Goldman Sachs is right behind them at $4,900, driven by central banks that just keep buying. The conversation has totally shifted from if gold will hit $5,000 to when.
Of course, no trend lasts forever, right? There are definitely some real risks to this rally. If they find a peaceful solution in the Caribbean, that could take some of the fear out of the market. If the Fed suddenly gets tough on inflation, that could strengthen the dollar and hurt gold. And you're already starting to hear whispers from major institutions about a potential speculative bubble.
Which really leaves us all with the ultimate question. Was that Christmas Eve breakout the start of a new kind of gold standard in a world where the old financial system is starting to crack? Or was it just the spectacular peak of a historic bubble that's about to pop? The answer to that is probably going to define the markets for years to come.